International Monetary Fund has predicted a sharp slowdown for the global economy due to the imposition of US President Donald Trump's unprecedented tariff policies. But despite this, the US stock market saw major gains today. To help make sense of it, we're joined by North America correspondent Carrington Clark. Carrington, an alarming new report, but markets don't appear worried. So what's going on here?
Yeah, we kind of had two forces at work today. There was this very negative appraisal of the future of the global economy from the IMF. They've shaved off 0.5 percentage point from what they think global growth will be in the year to come, down to 2.8%. And that's almost entirely due to Donald Trump's trade war that he's waging basically on every country on earth. America will be particularly hard hit, but countries around the world are going to feel the pinch, as are consumers and companies when they go to pay for imports. But the news that excited investors today came from behind closed doors. The Treasury Secretary here in the United States, Scott Bessent, said that he believed a deal could be struck with China, suggesting that both countries recognize the current situation where you have 145% tariff being levied on Chinese imports into the United States and 125% on American imports into China is unsustainable for both countries, and both want to do a deal. He suggested that the negotiations would be a slog, but he was confident eventually they would be able to do a deal. Now, the US president was subsequently asked about these comments, and even though the Treasury Secretary was in the room, he decided to answer himself, and he did suggest that this 145% tariff would be coming down at some point.
145% is very high, and it won't be that high. I'm not going to say, oh, I'm going to play hardball with China. I'm going to play hardball with you, President Xi. No. We're going to be very nice. They're going to be very nice, and we'll see what happens. But ultimately, they have to make a deal.
So investors are hoping that this means that a deal could be in the works and could be struck, and that would be good for global growth. The other interesting thing to happen on markets today was the release of Tesla, the electric car maker's results. Now, we saw a quite insane drop in the profit for that electric car company, down 70% year on year. Now, Elon Musk got on the earnings call to explain the results, and he recognized that the Tesla brand has been badly hurt by his close association with the Trump administration, and in particular his role leading the Department of Government Efficiency, also known as DOGE. Investors seem happy, though, that Elon Musk has strongly suggested that his time at the top of DOGE will be coming to an end. He said as of next month, he will be paring back his responsibilities at DOGE, although he did say if the president asked him to serve on longer, he would be open to it. But it does look like investors are excited by the idea of Elon Musk spending more time making cars, running that company, than cutting government departments here in the United States. He did also say that he had been an outspoken critic of the tariff regime within the inner sanctum of Donald Trump's team. But at the end of the day, it was Donald Trump's call about what would happen on tariffs. But it does appear that this quite remarkable relationship between the world's richest man and the world's most powerful man might be consciously uncoupling in the next few weeks.